Today, we're looking at something really cool. During the Ethereum conference, Uniswap announced the release of Uniswap X. What it does essentially is allow you as a trader to find the best prices you can find for any token that you want to trade. And it goes a little bit beyond that because it's not just about the best prices, it's also about getting you enough liquidity. Now, if you've ever been to Uniswap or even Binance or any other exchange, and you've wanted to do a pretty big trade on perhaps a rare token that's not as big, that doesn't have a lot of liquidity, what happens is that when you put in your buy order or your sell order, initially the other side might buy the tokens that you're selling, but then the problem is that the liquidity on the other side might not be enough. And what's going to happen is that you get slippage and the price changes really quickly. And in the end, you don't get as good a deal as you could have. And sometimes you don't even get the token that you need. Now, this is where Uniswap X comes in because what it does is when you make that trade and you want to buy, let's call it token X, something really rare and unusual, Uniswap X, regardless of the exchange that you are on, will go and look for other sources of the token X that you want, and it'll go through decentralized exchanges that are participating, major exchanges like Binance, and it'll also go beyond that and it'll actually pretty much look for anybody who is offering liquidity. Now, you might be wondering, well, we've already talked about the exchanges, decentralized exchanges and the likes of Binance. Who else could be offering liquidity? Well, there's a whole bunch of people out there with a lot of tokens that they might want to offload. And this is more so when it comes to over the counter trading. If you haven't done over the counter trades, this is typically for really big trades, let's say to the tune of $50,000. Now, normally, if you want to buy or sell anything that is worth $50,000 or more, it's really difficult, guys. Uh, One of the things you can do is you can set a bot to sort of eat up the orders really slowly without changing the price. If you don't set up those bots, it becomes a really expensive affair. You've got to sit there on the computer. Because what happens is if you fat finger, it's called, and just hit sell or buy $50,000, wow, that liquidity is going to be eaten up really quickly, and the price is going to skyrocket, and you're not going to get your tokens at the price that you want. In fact, if you go back to 2017, it's a really popular time during the bull run where some guy, we don't know who he was, and he might have been on Binance, I think, and he did pull that fat finger. And what happened is that he wanted to sell Bitcoin, and I forget exactly how much he sold, but it was probably hundreds of thousands of dollars by mistake, and the price shot all the way down. I think Bitcoin went down to pennies. And then over time, the arbitrages came back on and they filled up the exchange and the price went up really quickly. Actually, it was in a matter of minutes. And so anybody who had a limit order way down there sort of made a lot of money. Now, what Uniswap does is prevent precisely this kind of problem. So with Uniswap X, you can go to any decentralized exchange, fat finger as much as you like, buy or sell as much as you like. It doesn't matter what the size of the liquidity is. And what Uniswap X will do is it'll not only go through the different exchanges, over the counter trades, and so on and so forth, it'll actually spread out and do this in multiple different directions. And you might be trading Ethereum for your token X, but it's not only going to look for that, it's going to look for all kinds of interesting pathways. It might not be directly from Ethereum to X. It might go buy some Link and buy some other token, buy some Matic, and pretty much do some magic and do all the trading you need to do in the background, satisfying every interesting party and pretty much getting you your tokens nice and cheap. So, in summary, Uniswap X is not an exchange. It's a brand new protocol that is really fantastic. Some of you might have heard of 0x. 0x has been around for quite a while, and it's actually similar. It's a really cool protocol that runs on Ethereum, but then it actually connects a whole bunch of blockchains. And when you go to 0x and you make an order, it pretty much does almost exactly what Uniswap X does, but with a little difference. And if you want to try how 0x works, or if you want to get an idea of how both 0x and Uniswap X works, and if you've never tried this before, go to matcha.com, link below, and you don't have to buy anything, just connect to Matcha and pretend that you're going to buy $50,000 worth of a token or something like that. And Matcha will actually show you the prices that you're going to get and even the pathways that it's going to make. And the surprising thing is, try this on Matcha, try this on any other decentralized exchange. The difference in prices is going to be huge. So Uniswap X is a competitor to Matcha in that you make an order and they spread out and they come back and they give you a really good price. Now you might be asking, well, what's the difference? Why do we need Uniswap X? The first thing is competition. The second thing is that there is a pretty cool difference. When you place your order on Matcha, what happens is your order just goes and sits in some database somewhere. We'll call it a database. And it's an order book of buy and sells. And pretty much you want to buy token X, let's say for 5 ETH. That's your order. And Matcha and 0x try to match it up and you get your price. Boom, perfect. Now, the difference that Uniswap has is that it'll kind of do something similar. You want token X for 5 Ethereum, but then the cool thing is that Uniswap X will actually try to find a better price for you. So what it does is it'll put your request for 5 ETH for token X, it'll put it on a table, but then it's not going to put it at that price. It's going to put it at a slightly better price for you. And it might start at 3 Ethereum for your token X. And what it's going to do is it's going to wait for a couple of seconds to see if there's anybody out there willing to buy it and buy your order at a cheaper price. And over time, it's going to increase it and increase it and increase it. And as it's changing this price from something super favorable to whatever you're willing to pay for it, the maximum amount you're willing to pay, there's these other older listeners that are listening in and they're literally standing by waiting to jump in and give you the trade that they're willing to and this is what you call a Dutch auction, and it pretty much ensures that you as the user of Uniswap X gets the best price. And so that is the key difference between Uniswap X and 0x. But the problem is that for now, um, Uniswap X is super new, and in order for this to work really well, you need a whole bunch of exchanges to participate, and it's only been out for a week or so. So at this point, I think we can assume that only Uniswap is running it for now. But given that Uniswap is pretty big and it has a huge treasury of Uni tokens, I don't think building a ecosystem of participants is going to be a problem. In fact, what's really cool about these protocols is that they can both work together in that 0x could end up using Uniswap X if it wants to. And at the same time, if Uniswap X wants to connect to a whole bunch of liquidity really quickly, but perhaps not as perfectly, it could connect to 0x. I wouldn't be surprised if they've already done it. And and you can actually go to Uniswap right now, and there's a little auction option that you can toggle. And once you toggle that, you can try the prices and see how they're different. But this is just in beta right now. But I can guarantee you that a couple of weeks, it'll probably you'll need to toggle anything, and it will be the default. And this is really cool because we're starting to see the whole composability of decentralized exchanges and major exchanges. And what this means, what Uniswap X and 0x are doing for you and me, is that in the end, when we choose a decentralized exchange to trade off, well, in the end, it's just going to be which interface do you like? Uh, which one is more secure, which one is perhaps legal in your jurisdiction. But in the end, what's going to be happening is that there's all of this composability or smart contracts just working together, linked together by Uniswap X and 0x, and just making sure that we get the right prices. Now, we've already talked about the price being really cool, but then the other thing that you get from using Uniswap X is a couple of really cool advantages. One of those is that the swaps are gas free. That's kind of crazy in that when you want to trade your tokens, you don't have to pay gas. What happens is that the people who are filling in your order, who are waiting on the sidelines of this Dutch auction, they've already factored in the price of the gas in their heads, and they pay the gas for you. For them, it's a lot more affordable than for you because, I mean, these are big players, and you're there, you're probably just trading once a day, once a month, once a week, or something like that. Meanwhile, all of these service providers, feel as they're called, they're there 24/7. It's actually smart contracts doing it. And since they do it in bulk, they can afford to handle the gas fees much more easily than me and you. And that's a really cool advantage that you don't get from 0x and Matcha. And then the other cool thing is that you get protected from what's called MEV, minor extracted value. The new word for it is maximal extracted value. It's a smorgasbord of words, but what it is that the problem is that when you're trading on 0x and any other exchanges, what happens is that when you place your order in the blockchain and you say, "Hey, I've got five Ethereum, and I want to get myself some X tokens," what happens is that your order goes into the I forget what it's called, but it goes into a holding area before it's actually written into the block. I think it's called the mempool. Once it's in the mempool, not many people can see it, but however, the miners on Ethereum or any other blockchain can actually see the order that you're about to do, or anyone else is about to do, and they can see that you're about to buy your X45 Ethereum. And what these miners do, honestly, because they can and they're just trying to make a bit of extra money, is that they see that you're going to buy that, and what they do is they actually front run you because they can see the trade you're about to take. They go get the token, they come back, and they sell it to you at a slightly higher price. And pretty much this is what happens when you're on Uniswap or any other exchange currently. You place your order, you get the initial quote, and then your order executes, and it comes back a little different. You've lost a couple of dollars. If it's a big trade, you've lost quite a bit of money. Here's what you call MEV. And there's been a lot of work out there trying to prevent this. And it looks like Uniswap X is one of the people that has solved it. Now, think about it. You connect Uniswap X to all of these exchanges. They're there trying to make things better for you. Nobody wants the MEV extracted from them. Boom. You can trade without MEV, and you're also getting slippage-free tokens, or at least as slippage-free as is possible. You're getting huge liquidity. And the other thing is that Uniswap S is also going to be cross-chain. Not yet. We're going to wait for that. We've got to wait for it to run properly on Ethereum and see how it goes. Make sure the white hats try to hack it. Make sure the black hats also go and try to hack it. And you give it enough time, you allow it to grow, and eventually Uniswap X will end up in a lot of different exchanges. Now, you might be wondering, well, what are the risks? This is a new token. We just talked about black hats and white hats. The good thing with protocols like this is that typically the risk isn't too huge. You usually get pretty big risk when you're dealing with lending protocols, let's say like Aave. If a new lending protocol came out tomorrow, doesn't matter if it was audited or not, I can guarantee you that there'd be hackers, black hat, white hat, going after it, trying to break it, trying to get your money. And the reason that they go for these lending protocols or bridges is that they tend to hold a lot of money. Everybody's money is sitting in a big pool. We call it a honeypot. And sometimes it's in the hundreds of millions, sometimes it's even in the billions. And I'll tell you what, that's really tempting money for anybody who can figure out how to get it. It doesn't matter if it's in a smart contract. If the smart contract isn't written right, boom, a hacker gets in, they've got your money, and you're screwed. Now, the good thing with this other kind of smart contract like Uniswap X is that it's insanely hard to capture, even as a hacker, all of the value that's kind of floating around the system. You take a big decentralized exchange like Uniswap, and it's hundreds of millions, if not even close to $1 billion worth of volume traded daily, right? That's super tempting. But the problem for the hacker and the good thing for us is that these trades are sort of dispersed and nobody knows when it's going to happen. It's going from one account to another. The accounts are totally different. Really difficult to hack. The biggest risk I would say that could happen with a protocol like Uniswap X, there is a risk. It's not as big, but the amount of tokens that you might be trading at that specific time could perhaps be at risk. But normally, when these things happen, they're usually discovered really quickly and the hack is stopped. And given that Uniswap is a really big protocol, they've got a huge treasury and they want to maintain their reputation. I think what would happen in such a case, since transactions in the blockchain are easy to track, is that everybody will probably just get their money back. Now, that is a really low risk, I would say. So, honestly, nothing worth worrying about. But then, as the longer the smart contract is out there, the longer it's hammered by all of these people, the more secure it is. We've got all these crazy protocols that have been out there, including Aave, zero hacks, and we've got others that were hacked on the second or third day. So security is risk is probably low, but it's still a wait and see. And good news if you are a uni holder. Well, this is one of the this is an additional use case for Uni. Now you govern not only Uniswap decentralized exchange, but you also govern the protocol. What can you vote on? Well, one of the things you can vote on is obviously the services that it's going to connect to, the different blockchains it's going to flow to. And the other thing you can also vote on is the fees. That's pretty exciting. And in this case, if the community did vote to turn the fees on, what would happen is that if you're a uni holder and perhaps staking it, you'd get these fees. Yeah. The problem is that I think the fees haven't been voted in yet for Uniswap and Uniswap X because of the competition. So there's always that kind of thing to balance, and I guess the community has to decide. Now, is Uniswap worth getting if you're not holding it? If you're holding it, congrats, you got it early, well done. Now, not financial advice, but do I think Uniswap is worth holding on to or buying rather? I think it depends on your investment perspective. If you're looking for an insane amount of growth, no. That's an obvious no because Uniswap has already gone through its growth. It's an amazing token and it's been there for a while, and it's really hard for any other decentralized exchange to come and push Uniswap out of its market share. Could happen, but it's really unlikely. So if you're looking for a 10x, 100x token, I wouldn't say Uniswap would be the one to hold. However, I think it's an interesting token that I personally would consider holding just to diversify my portfolio. Now, at times during the bear markets, those are the times when you usually want to, I suppose, hold on to put different tokens that you might find are interesting. They don't have a crazy amount of growth into it, but then at the same time, you're kind of trying to diversify your risk. It's worth considering in this case. Now, the only other thing we haven't talked about is the future plans of Uniswap and Uniswap X. Great. So they've released their token that's been out for a long time, and they've released Uniswap X. That's amazing. But then the problem is that the ecosystem is really small. So if we want to see Uniswap grow, I think the thing that they really need to do is pretty much incentivize as many decentralized exchanges, as many uh, uh, large exchanges, and as many over the counter services to join in and make Uniswap big. And the more people that join this protocol, the more valuable it becomes. I mean, right now, if it's just Uniswap there and maybe one exchange, you're not really getting your value's worth of deep liquidity in any token you want. However, if Uniswap can use its massive treasury to bring in all of these people together and just grow that ecosystem, I think that's going to be huge, and it's going to be a big advantage for everybody, pretty much for every exchange. Whatever exchange is your favorite, you just go there. And the cool thing is, you don't even have to think about it. You don't have to toggle a button and say, oh, I want to use a 0x, or I want to use Uniswap X for this. You just hit, I want to buy token X for 5 Ethereum or 50,000 Ethereum. And as long as these two protocols are connected, boom, there you go. You get your tokens nice and cheap. So in conclusion, this is really amazing. This is really cool. If you are a uni holder, congrats to you, and that's fantastic. If you're not a uni holder, that's still fine. You can still enjoy the fruits of this protocol in that you can get any token that you want for low liquidity. And during the bear market, you could also consider picking up some uni just to balance out your portfolio and essentially just de-risk your portfolio by holding a bunch of different tokens. You definitely don't want to hold that one golden token unless it's Bitcoin and Ethereum. It's hard to go wrong on those. And I guess that's it. If you've got any questions or comments, or if you've got any protocol that you want us to review, put it down there. If you're still here, thanks for hanging out and supporting us. Make sure you like and you subscribe and help us get the word out and grow this channel. Thanks, guys. Stay curious, and until next time.